Good morning and welcome to Patriot Radio News Hour. Joe and Jason on this Tuesday. I hope it finds you well. We got a big show lined up for you, just like we thought. We're probably not going to need governments to get rid of cash. The banks and big business, they're going to do it for you. We got breaking news out of Australia. One of the largest banks in Australia saying they will no longer be involved in accepting cash deposits or cash withdrawals. Heck, they're getting out of the check business as well. And I know what you're thinking, well, it's Australia. Can't be that big. This is bank, the size of this bank, to give perspective, is almost twice the size of Silicon Valley Bank. This would be a bank that would be right at the top 10 U.S. banks size-wise, asset-wise, and no small feat. So we're going to give you the details to that starting in the next segment. Our toll-free number, 800-951-0592. The website at allamericangold.com. And for all of you, I know this is what's coming. I know a lot of you have been worrying about it. A lot of you have been thinking about it. When's it going to happen? How's it going to happen? We're going to get into all of that, and it's a lot sooner than a lot of people think. I mean, we've even got our own banks here saying, hey, within 5 years, this is what it's going to be. And it looks like the 5-year window has been moved up. We do have some economic data that we want to get to before we get into that. We had new home sales today. This would definitely be the bright spot of the housing market, crashing down to earth. New home sales, this was an August number. So this number is getting worse because obviously rates got even higher here in September. Falling by 9%, well, 8.7% month over month. The biggest drop going back to September of 2022. Home prices, they didn't move a lot. I mean, they're down, but barely. $430,300 was the average price, which was higher. The median price, I apologize. The median price was $430,300, which was a little lower, just a smidge. The average price was actually higher, but you do the math. Either way, Jason, this was the one, call it the bright spot in the housing market, crashing back to earth. Home buyers now, or new home builders, all of them now launching rate buy-down programs, cancellations. We know this from the data we've already seen, skyrocketing in August. You have people in there that are saying, hey, I've been in this industry 20, 30, 40 years. They've never seen this amount of cancellations. And when you think about how low the sales were, plus the cancellations, the inventories did go up. I guess if that's a bright spot, which probably really isn't a bright spot, is it?
No, not for price. If people are stopping buying the houses and then the inventory increases, then of course, the price per home should drop. And so yeah, Joe, it's the indicators are always pointing in a worse direction right now. It's been going on pretty much since the inflation started in 2022, especially 2021. But all these indicators are getting a little worse. Like I said, it's getting a slow grinding push towards the cliff. It's almost like someone's trying to push the guy off the cliff, and he's dug his heels in, and he's just barely scraping, trying to slow it down. And Joe, it just seems like a lot of these numbers are all going to coincide sometime next year, and a tremendous emergency economically is going to start. And housing is going to be there with the rest of it, Joe. I mean, we could see a price crash of everything at some point when things get really bad.
Yeah, and again, you don't see, almost 10% declines in sales in a month. You don't see that. That doesn't happen, right? A big decline. 2-3% would be considered big in a month. To get up here to 8.7%, and again, this is the worry here. Are we entering into the suddenly phase of this? We've been gradually slowing here. Jamie Dimon was out with a lot of negativity about stagflation, saying that, hey, the world's not ready. America's not ready. I'm going to tell you, you know who's not ready? The banks aren't ready. We got a great show today, not only about what's going to go on with digital money, what's going to happen with cash, what's going to happen to privacy. We're also going to update you on unrealized losses in the banks and how the banks are trying to hide it, and the Federal Reserve is helping them. And this is part of the problem, right? There's no transparency here. We're going to give you all of that information, but the Dow losses are picking up here, down 300 points, back down below 34,000, 33,000 and change. The S&P, the NASDAQ down as well. The 10-year note rising again, and this is going to be a problem. Just like we warned you. Remember, we warned you starting in August this was going to happen. Think about it. The Fed didn't even raise rates. Heck, they didn't even promise that they were going to raise rates at the next meeting either. And yet the 10-year note continues to go higher. We're going to break it all down for you when we get back. $800-951-0592. A quick look here at the markets as we were talking about the Dow down almost 300 points right now, 33,700. The S&P's down 50 points. The NASDAQ's down 160 points. The 10-year note, 455 on the 10-year note. It was down early in the day and just recently spiking back up. My guess is they're having some problems at the auction. That's just the guess here, that demand just not where it needs to be. Crude oil still above $90 a barrel, up 40 cents right now. Gold and silver, they're down, but not a lot. They're down. Gold's down 12, silver's down 15 cents. The Japanese yen, we keep watching. It just wants to stay at 148, 149, but we'll see how this all works out. And I'm just telling you, you better have your financial house in order. These banks, the problem didn't go away. Now, they've tried to hide it, and we're going to expose it. But the digital currency is coming like a freight train. And it's already started. You cannot be late. If you are late, you're going to pay the price. Do it, and do it now. Get your money out of the bank while you still can. I'm just telling you. Do what you want. But do it before it's too late. And you need to check out our friends at Y Refi. It's another way. Because I get it. Hey, you can't put everything into gold and silver. That'd be foolish. Check out Y Refi. It's not correlated to the stock market. It doesn't care that the Dow is down again. Doesn't care. Doesn't care that rates are higher again. You get great rates of return, up to 10.25%. It's fixed. What does fixed mean? Fixed means it doesn't change. Right? How nice will it be when the stock market and the banks, all of this stuff we've been talking about, the next bust in the boom and bust cycle. This is just the cycle they put us in. I didn't put us in it. You didn't put us in it. The bankers put us in it. And you don't have to worry about that part of your portfolio. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or call them at 888 Y Refi 24, and as you know, you got to have a minimum of $50,000. Now, Let's get to it. Australian-based Macquarie Bank says that it will launch a plan to eliminate all cash, checks, and phone payment services in January, shifting to a digital operation by the end of 2024. So they're giving notice here. They're giving notice, saying, hey, we're going to start this process in January. They expect the process to be completed by November of 2024, which at that point will be phasing out our cash and check services across all banking and wealth management products, including pensions, super accounts. We're also switching off our automated telephone banking service used to make payments over the phone. So, again, I know that some people have that service to allow them to make payments over the phone. That is going to go away. This means from November 2024, we will no longer offer cash or check services. Instead, you'll be able to make payments digitally. And again, now they got to give you the good part. Safer, is it? They say it is. Quicker and more convenient. See, and that's what they love. Right? It's more convenient for you. Yes, it's going to be more convenient. And again, the best way to give people to give up their freedom, tell them it's more convenient. Customers who currently deposit and withdraw cash at our branches will also lose that option by November, Jason.
Wow. So that's a whole lot right there in one breath, basically. Yeah, that listening to the war drums about how digital currency is just so important and how, it's just so terrible for us to have to use all this physical money. And what are you doing with that stuff? It's just another case, Joe, of wanting people to go to sleep. Hey, how many times have I said this? Don't worry about your money, right? Don't worry about your money because somebody else will worry about your money. That's what this is completely. They want to worry about your money. They don't want you to worry about your money, Joe.
And again, this is a bank with roughly $300 billion in assets. This is not a small bank. This is not some obscure bank that nobody's ever heard of. Now, listen to this. So you no longer can deposit cash. You no longer can go into the bank to get cash. Those are outlawed. But don't worry, they said. You can still get cash from the ATM if you'd like. Of course, and they've got their daily limits, right, and all that. Here's the problem. See, because the bank will say, see, oh, no, you can get cash. I mean, you just can't put it back in, right? You can't put it in our bank. So think about this. And again, we know how these banks work. One does it, then they all do it. Hey, we didn't ban cash. You can go to an ATM and still get some. You just can't put it in the bank. So, again, what would retailers do? What are these retailers? What would anybody do? And the answer is simple. Well, gosh, I'd love the cash. Problem is, I can't put any cash in the bank, which essentially means I can't take cash anymore because, after a certain point, right, you need, you can't just stack it up at your house like Senator Menendez of New Jersey. You gotta put some money in to pay for the stuff you're selling. Jason, this is it. This is exactly what we thought, and look how fast they did it. Hey, by the way, first, we gave you a little notice. We gave you a 90-day notice, a little over 90-day notice. That started in January. We're going to start this process. Then come November, we gave you a little over a year. We're going to let you know no more cash, no more checks, everything's going to be digitized. I mean, it truly is something that, again, like I said, this is going to happen, and it's going to happen everywhere. And I loved don't worry. You can continue to withdraw cash from the ATM. Unfortunately, nobody can actually put cash in our bank any longer.
Yeah, and kind of like a disease, Joe, when certain banks stop using cash, then other businesses start doing it, and then people stop doing it. And pretty soon the people that are holding on to cash and trying to still use it in that system start looking at their hands, what they're holding, and then wondering how is this going to benefit me? Not because it is a better form of money than digital, but just because no one's going to use it, then you've got something that is not desirable. I mean, most people have no desire to spend or do anything with coinage, pennies, nickels, and dimes, quarters. Right. People just don't even like it. Kids just throw it on the ground. I remember a show I used to watch, The Impractical Jokers, and they do these things. They try to get everybody else to you got to stand strong when the other guys tell you to do some weird stunt, right? And one of the guys, Sal, one of the ways they always got him was they gave him like a jar full of coins. Like, okay, now go tip and go pay for that. Pay for some dinner with this. And he'd immediately bow out because he doesn't want to do anything with the coins. For him, it's too embarrassing to use the coins. That's what they're doing with cash, Joe. They're making it the unpopular kid in class, aren't they?
Yeah, but wait, there's more. So Australia's two largest banks. So now Macquarie is the fifth largest bank, about $10 billion away from being the third largest bank. So they have their third, fourth, and fifth largest banks very close together. And again, all of these banks, their third, fourth, and fifth largest banks, would be essentially top 10 banks or top 15 banks in the U.S. Their two largest banks. By the way, both of them would be the fifth largest bank in America, just to give you an idea. I know it sounds crazy, but that's where they're at. ANZ and Commonwealth Bank have also revealed plans to eliminate the cash option. What they've done is said you're only allowed to deposit cash or withdraw cash at certain branches. In other words, so Macquarie just said, screw it. You're not going to do it at any of our branches. The two largest banks are now saying, well, we're going to let you do it, but only at a couple of places, Jason.
Only at a couple of places. Those might get to be pretty busy places, I guess. that's and of course that'll be another thing to make cash look bad. Hey, here's the digital line and here's the cash line. I've already seen those in some stores. Yep. And the cash line gets long and unbearable, and then you know what people are going to do is like, well, let's just throw all that money in the bank so we can get in the shorter line. All of this stuff's going to happen. All of it.
And again, think about it as a business owner. Well, gosh, I got this cash I got to put into the bank, but the only branches that'll take it, I've got to drive 20, 30, 40, 50, 100 miles to deposit it. Well, they're just going to stop taking it. This is exactly the plan that they're going to use. They are going to let businesses do it instead of the government having. The government's going to be able to not really, they're not going to have to do anything, right, Jason? It's just going to go away, and nobody's going to take it. And, of course, at that point, what's it worth if nobody was willing to take it?
Well, yeah, if nobody's using it, it has no value. That's what's happened to a lot of fiat currencies throughout history. But this is a little different. They're just trying to push you into a different version of fiat currency. You know, this is paper now becoming, too expensive for the system. Just like copper became too expensive, and then silver before it, and gold before it. Paper is too expensive for these bankers. They don't want it to be out there. It causes them grief not to have control over all of their paper money with their digital money. Joe, what is it? 2% of all the money in the banks is paper, and how much they need to really flush that 2% out of the system shows you how desperate they are to have all control.
This is desperate. This is absolutely alarming when you think about what is happening and what is coming. This is exactly what you're going to see already. Think about this. Here's what the bank said. This is what they said. We could charge you. Right? Because think about it, right? Why instead of doing this, why not just whack them? Right? You charge them 2, 3, 4, 5% to do all of this stuff. Nope. We're just getting rid of it altogether. Look at what's happening here. A lot of people are finding out, and there's a lot of them. You're one of those businesses that routinely has to go to your bank and withdraw cash. If you're one of those businesses, be on the lookout. These banks are trying to get rid of you. They view you as a threat, because if too many of you go in on any one day and withdraw a large quantity of money, and think about this, as the economy worsens, a lot of these places need, right, they're going to have a need for even more of this cash. It's going to be a huge problem. Australia's banks, they just figured it out. Yeah, we're just not going to take it anymore. $800-951-0592. In a little over 90 days, this starts in earnest in Australia. Think about it. And I don't even know about their third and fourth largest. I would imagine they're all doing it. That's what it sounds like. It just sounds like Macquarie, the fifth largest bank, said, okay, let's just stop playing around. Right? These other banks, we're going to leave a few branches where you can do it. They're like, yeah, nah, we're just not going to do it at all. And again, look how fast this is coming. You don't have time to wait here. Wall Street, man, losses, the Dow dropping rapidly here, approaching now 400 points down, as again, I think people are starting to figure out we've got a debt problem and we've got a funding of the debt problem. Let's not forget a government shutdown. There is no budget. There is no budget for 2024, which starts October 1st, which means the government will shut down this weekend, and it looks like that's where we're headed. S&P this morning, they're the only ones, I want to say it was S&P, whatever rating agency had yet to downgrade. They announced today, the government shuts down, yeah, we're probably going to have to downgrade the debt. Batten down the hatches is all I can tell you. And today, I'm going to say this, a great opportunity here in the gold market. We got a great special $10 Liberties. Remember, $10 Liberties got a lot less expensive than the 20s for a while. And then all of a sudden they came roaring back. Got an opportunity on them today that you're not going to want to miss. $10 Liberties 1 through 9 at $1,075. So if you bought two of them, that would be $65 less than a 20. Remember, we ran 20s earlier in the week, but I hardly had any. Now they're back up. If you buy 10 or more, $1,065. That would be $85 less than a 20. Those are the things you want to take advantage of. These are specials that you want to take advantage of. Especially, listen, you know they're coming now. Well, you think Australia did this on their own? No. Why are they taking the forefront? Well, look at who had the most success in getting their citizenry to fall in line with these ridiculous COVID mandates. Australia. So it makes sense. Let's start it there, right? Your house suit. Canada's going to be following suit one by one by one. And eventually, Jason, we know this is just going to be the new practice. Well, it's safer, it's faster, it's more convenient, right? And let's face it, money's dirty, and look at all the criminals. right? This is, again, you don't think, I'll give you another example. You want another example? How about the SEC? Most of you don't really worry about the SEC. Well, they watch all the stock trades. Do you know what they're doing now? Every stock trade. The SEC is bringing it back to the Social Security number of the person making, you got your Schwab account, your E-Trade account, or whatever it may be. The SEC is now tracking every stock purchase you make. That's right. They don't have to tell you about it. They know exactly what is happening. And Jason, eventually, and people know, I think everyone's coming to the realization, this is going to happen, and it's going to happen with the next crash in Wall Street. And I think everybody kind of knows that that's the timeline. And apparently, as far as the Australian banks are concerned, that's going to happen in 2024.
Yeah, that's right. When Biden took office, within about a couple of months of him taking office, the Dow was 34,200. It's lower now. It's flat. The S&P was 4185. And the Nasdaq was 14.
Yeah, so the S&P right now is 4280. Right? Yeah.
Yeah. It's flat. And when you have the inflation that we've had in 2021, 2022, 2023, that's a stock market downturn. If gold was essentially averaging in that same time frame when Biden took office, it was sitting around 1698 at its low point, but it was averaging about 1825. So gold's up about $100. Gold priced in the inflation ahead of time. There's one reason that the inflation's priced in ahead of the inflation. It's because guys that make the decisions on where the economy is going, they know if the inflation's coming ahead of time, and so they buy their gold, and so the gold price goes up. Before the inflation comes back tremendously, which is that going to be early next year? Well, it's going to happen. We're going to have this rise in inflation. Gold will start to rise just before that, because look at the central banks across the world are buying gold like crazy. The fact that it hasn't gone up tremendously more is a gift to you, the listener, right now. And when it goes, it's going to go, and then the inflation is going to come behind it, and then you'll have already kind of missed a buying opportunity, which is right now. This is the next stage of good old days buying of gold, Joe. It's right now. The stock markets have done nothing for 2.5 years. Nothing with the inflation.
And we're getting ready for the
Your
bust.
Stocks are going down.
Right?
Yeah. Now they can go down. Now it looks like they can significantly tank. And gold's not going to tank. It's just, even if gold goes down a little bit, when price everything goes down, it doesn't matter, because gold's going to stop and bounce like a rubber ball straight up. Because gold is a commodity. It's supply and demand much more than stock is, Joe.
$10 Liberties, 1 through 9, 1,075. 10 or more, 1,065. That means if you buy 10 10s today, for every 2 you buy, you're saving $85. It's $85 less than a 20. $85 less than an ounce of gold. I mean, that's what, $42.50 per half ounce cheaper at 800-951-0592. And really quickly, and I want to give credit here to the Martins, Wall Street on Parade. On March 30th, 2022, so about a year and a half ago, 2 highly troubling things happened. First, the Fed was starting to show massive amounts of unrealized losses. And these were at the 25 largest banks, and they were approaching the levels of the financial crisis. You know what the second problem was? After that report in March of 2022, you know what the Fed did? They stopped reporting it. And they haven't reported it since. This is something going back to 1996. Every week, the Fed would report the unrealized losses number right up until March 30th of last year, and they haven't reported it since. Guess what, though? The Martins knew how to find the number. I'm going to tell you what it is when we get back. J.P. Morgan has settled the Jeffrey Epstein case for $75 million, avoiding trial. I guess we're never going to find out the names, are we? When, again, just tells you what scumbags these banks are. They knew exactly what was going on. But, again, today is the day. $10 liberties, 1 through 9 at $1,075, 10 or more at $1,065. Huge savings, especially if there's a government shutdown, which it looks like there's going to be. I have a hard time imagining that gold and silver aren't going to go higher on that news. Now, anything's possible, but it just doesn't seem very likely. And then go back to what the Martins revealed today. When was the first rate hike? Oh, let's see. Oh, wait. That was March of 2022. And all of a sudden, miraculously, a report that the Fed had been reporting on unrealized losses and gains since 1996 suddenly just disappears? No longer to see the light of day? Kind of curious, isn't it? Well, it's not curious at all, because the Fed knew. We don't want to tell people that, because what's happened here? What's the problem for these banks? Problem is, people are running out of money. They created all this money out of thin air, blew up the debts, forced the banks to buy debt at ridiculously low interest rates. And now the interest rates have skyrocketed, so all that debt for the last 15 plus years, it's all losers. All of it. On top of that, now we've got to pay for all the debt. See, that's where the problem lies. Of course, we've been telling you the reversed repos. Yeah, they just keep falling, don't they? Hundreds of billions of dollars a week. I mean, we're getting dangerously close here to that being gone. And now we're seeing the 10-year note refusing to go down. But it gets worse. So now the Martins have to rely on data from the FDIC. Which, two problems. It's not timely, right? And it doesn't tell you it gives you the amounts, but it doesn't tell you who. But here's something interesting that the Martins found out that the banks have been doing to try to hide what their losses truly are. And what this is called is they're moving these securities that they've bought into what they're saying that they're going to hold for maturity. Okay, so what does that mean? Well, the bank is saying, hey, these particular, whether it's treasuries, mortgage-backed securities, whatever it is, we're going to hold these to maturity. Well, how do you know that? How can you say, well, they can't. Right? Because, well, we're saying that, hoping that, we still have money left to pay all of it. Well, we're going to tell you we're holding these to maturity. Okay. So what does that have to do? Well, now, if we do that, then you don't put it on our unrealized losses report. What? Well, yeah, we're just going to move it to a different thing that we're going to tell you we're going to hold it to maturity. So that way, our unrealized losses look better than what they really are. And Jason, as we know, these banks can't make that statement. They don't know if they're going to hold them to. Now, here's the funny thing. Guess what this column was for? When they originally bought it, the banks could designate, we're holding this loan to maturity. That was supposed to go in that bucket. And banks will do that sometimes, because obviously they'll buy something that may look like a loser right early on, but the bank's like, hey, listen, we know it looks like a loser today. 10 years from now, this thing's going to be a winner. We're going to hold this to maturity. None of these were bought that way. But yet the central bank is allowing them to hide them. And to give you an idea of how bad the problem really is, when we look at how bad are the unrealized losses, J.P. Morgan Chase, the biggest bank, well, they've moved massive amounts into their held to maturity category, according to their latest 10K filing, and this was December 2022. So again, like I said, the data's old. It said it was holding $425 billion into the hold from maturity bucket. By the way, the Martins were able to deduce that is only really worth $388 billion. That would have been another almost $37 billion in unrealized losses at the Fed. And according to the FDIC's latest report on June 30th, 2023. So remember, that was the calm part. Matter of fact, the Dow and the S&P rallied. Now, granted, they just gave it all back today. Bank deposits have fallen by $920 billion, the big banks. At the same time, according to the FDIC, unrealized losses now total $558 billion. And that was in the second quarter, up from $429 billion in the first quarter. But again, I just told you J.P. Morgan all by themselves was hiding almost $40 billion worth of losses. Jason, how bad is it? And again, this is what they're allowing these banks to do so they can give us the illusion that they're not in as much trouble as they really are. Patriot Radio News Hour. Why do you think the banks are going to stop taking your cash? This is why. We'll be back after the break. $800-951-0592. Ugly day on the stock market as the bonds refuse to go down. Of course, it's just too much debt. Jamie Dimon is in India right now, and he's talking about what he's worried about. Let me just say this. No one knows what the outcome is going to be. There is a range of things. But I hope and pray that it's not as bad as I think it may get. I've been telling my clients, are you prepared for 7%? Saying that rates need to rise further to fight inflation. And I feel like 7% with stagflation is the scenario we need to be prepared for. And Jason, that's about as ugly as it gets. Which Jamie Dimon is now saying, hey, rates could be, 10-year note could be 7%, and we still have inflation.
Well, on the last segment, you talked about the big banks holding more stuff to maturity. I actually think that benefits the big banks, actually. Because if you're not holding to maturity, you sell at a discount. So with Jamie Dimon representing a big bank, talking about all these horrible things, what is he doing? He's telling all these other banks, hey, you guys are all going to be losers, and we're going to come scoop you up for pennies on the dollar. You scare your competition, and they run for the hills, and they're scared, and they sell cheap, Joe. And I think holding to maturity, that's the way you got to go, right? When everything else has to be sold at a discount. Well, only if you can. Right? The problem with holding the maturity, you got to be able to do it. The bigger guys are going to be able to, in my mind.
Going to be able to, yeah, right?
Yeah, the big banks are going to be able to do this. This is the whole point. Eviscerate, just destroy the competition, and this is how it works. How many banks, how many fewer banks are we going to have in the next couple of years? If you look at 2008 to 2013, I think it was like 580 banks disappeared. I think the list that the Fed put together third quarter last year, where they said there was 1,200 banks, that's what we're going to lose in the next few years. There's going to be 1,200 fewer banks. And with the digital currency, maybe 2,000 or 3,000. We don't know. They're becoming unnecessary on top of, hey, who can't hold their stuff to maturity, right, Joe?
Yeah. And then you throw in, by the way, you can't deposit your cash anymore.
Yeah.
Right, let's just throw that in for good measure. 800-951-0592. $10 liberties 1 through 9 at $1,075. 10 or more at $1,065. That'd be $85 less. 2 10s would be $85 less than a 20 at that price. At 800-951-0592. And again, it's going to be an interesting rest of the week. Right now, I'm watching crude oil up almost $1 with the 10-year note rising. We're going to get oil inventory numbers at the end of the day today, and I'm guessing people kind of already know Cushing, Oklahoma. We may see a new all-time record low for stocks in Cushing, Oklahoma. And Jason, if that happens, we're starting to see it now. People saying $100 a barrel oil is going to be the new normal. This morning, I saw a couple of analysts calling for $150 on a potential news. And this is just stuff, again, they caused the problem. You need to get your money protected. Call us, 800-951-0592. Jason and I were coming back with the half-empty cup.